Hi, welcome back to the channel. Now, in this month's analysis, I am going to walk through a really high level broader market analysis and cover all of the major indexes, asset classes. I'm going to cover the Magnificent Seven as well as around 15 individual stock ideas for the month of November with a few price targets as well. It's taken around 20 hours to prepare this month, so I do hope you find some value from it, and hopefully the Scottish accent isn't too difficult to understand. Before I get into the charts, just something to say from the start is the market has really been very, very challenging. We've undergone a really broad-based market correction, which obviously hasn't been helped by the Middle East conflict. And I think everybody is now starting to wonder if it's safe to start buying the dips. And as always, I have some charts prepared to answer that very question. But I know for many of you it will feel like treading water just now, especially if you're new to the market. Fortunately, this isn't my first rodeo. So I know what I'm looking for and how to assist our clients. And I'm going to be sharing some of our client work with you today as well. But we have seen some big moves across areas like energy recently, but I know it's been quite frustrating, I think, for most of the growth-only tech investors. If you followed my work over the last month, especially my weekly letter, which has had a lot of attention, and my Twitter over the last month, hopefully my work has kept you on some kind of the correct path. But let's not dwell in the past. I think we've got the final 2 months of the year to look forward to. Hopefully there's nothing lurking around the corner to surprise us. But if you do find some value from my work this month, please do hit the like button. It helps with the YouTube algorithm and helps to get my work a lot more noticed. But if you are new to my work, just something to clarify is I'm not a perma bull or a perma bear. I'm always open to all outcomes. For example, over the last 2 months, our client work has been bullish on some areas and stocks and very, very bearish on other areas. I have no bias, and I think this is really, really important. But to state Captain Obvious, managing risk is always priority number one. Now, for disclosure, myself or my clients may already hold some positions in some of the names mentioned, but I have highlighted those disclosures and timestamps on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. As most of you know, I do not use the magical hindsight indicator. I timestamp all of my work, which is massively, massively important. I'm not one of those analysts that makes broad market calls before they play out 6, 12, 24 months later. I'm one of the very, very few who go on the record with their work and timestamp everything. But my work is for everyone, everyday investors, traders, options folks, financial advisors, money managers. I'm looking for structural trends that will last weeks to months. I use systematic process and logical targets. If we sat and had a beer together, I'd tell you I'm more of a technical investor personally, but my work does apply to most styles, and I'm told my charts are among the very, very best. Now, just quickly before I get into the charts, we have just recently partnered with TRENDSPIDER. So if you are someone that's looking for technical analysis software, they do provide a very generous free trial, and they are providing a massive discount at the moment for the next few weeks. So I'd encourage you to check out the link in the description. They're incredibly cost effective, but they are also perfect for everyday investors and traders. But please do pause the video, make sure you are comfortable with that very important disclaimer, and let's just dive into these charts. Now, let's kick things off just quickly with the S&P 500. Now, I'm using the SPY ETF here. Now, something to say is I am recording this around halfway through Friday's session, so the charts are probably subject to a little bit of change. We've had the Fed interest rate announcement this week. We've had the non-farm payrolls again today as well. But the market over the last couple of days has reacted very, very favourably. Now, something I want to highlight here with the S&P 500, I'll just draw your attention to the bottom section of the chart. This is what we call market breadth data. And I posted this chart in real time to Twitter, I think it was on Monday, maybe Tuesday, just basically highlighting that the percentage of stocks making new lows stopped going up. Now, that's quite a useful metric because it's really just one of those charts that just says that there's a divergence. We can see that price is going down, but under the surface, the market is starting to show a little bit of constructive behavior. Now, I like to use new lows and new highs at big market turning points. For example, before a market crash, I'll use the percentage of stocks making new highs. You'll often find that there's a divergence there. And what we've seen this week is really no surprise whatsoever. As we can see, the percentage of stocks making new lows is massively on the decline. So there's a lot of constructive behavior going on under the surface. Now, before you jump into the comments, I know the state of the economy, I know the situation obviously in the Middle East, etc. But what I would like to just maybe draw your attention to next is another signal that I've been using for the last couple of years, which is the US dollar index. Now, it's very, very clear with the US dollar index. What the dollar communicates to us is when the dollar is going up, stocks are typically going down, and when the dollar is going down, we can see that stocks are going up. So what is the market currently telling us? Well, as we can see, the US dollar index on a shorter term time frame is starting to put in a topping pattern. Now, this is exactly the same pattern that we've seen a few months ago, which was a signal that stocks were likely to come under pressure, broadly speaking. Obviously, within that, you've got various sectors that performed fine. We've seen, of course, some of the mega cap tech names start to move and rebound, etc. But broadly speaking, if you want to see a broad-based market rally, you want the dollar to roll over. And this is exactly what we're seeing. Now, I've been preparing for the last couple of weeks, starting to put bullish charts to our clients, etc. And we are now starting to see today that with the dollar going down, stocks are going up. But also, the weightings within the US dollar index are very, very important as well. Now, I always know when I'm onto a good thing when I receive random emails from Joe Public telling me that I'm an idiot for looking to buy stocks, etc. Because I posted this chart to Twitter earlier this week, just highlighting that under the surface, the euro was starting to look a lot more constructive. And given that there's a 57% weighting with the US dollar with the euro, what the euro does will then obviously have a massive impact on what the dollar does. And what can we see with the euro? Again, very, very constructive behavior. It's starting to put in a basing pattern. It's broken above technical levels. Now, just for clarity, there's no trend with the chart. If you're a trend follower and you are one of the relative strength gurus and you're looking to buy breakouts and all-time highs, I get it. There's no trend with the chart. But I think what my work is starting to become really well known for now in the professional world is the ability to highlight new trends at their source, not once they've already moved 20, 30, 40%. Now, we've obviously got rates, we've got the US dollar index. Again, one of the divergences that I've been watching very, very closely is that as rates have been moving higher, and I'm using the 10-year note here, again, we've had the US dollar index not making new highs. So again, that's been one of the signals that I've been looking at for a potential bottom to this corrective phase that we've had to obviously go through recently. Now, TLT is another story. Again, a couple of recent calls that I've made on this. No surprise to get the emails, but again, I think there's every chance that we're putting in some kind of bottom here in TLT. Again, this is one of the charts that I posted to Twitter last month, just highlighting the potential for a big reversal. We've seen it recently. I think TLT is up 7% from its lows. No massive surprise for me. And at the end of the day, if the bottom call is incorrect, then again there's a very easy out below these levels, which obviously date back to 2002, for example. So we're very, very bullish on TLT. We've been bullish on TLT for around 3-4 weeks now, and the hope is that it will continue to climb higher. But one of the things that I'm quite happy about this week is the drop off in volatility. The VIX, as I'm sure you can appreciate, has spiked over the last 6 weeks whilst the market has been correcting. But this week again, we've had that spike above 20, but we are now back into this kind of green zone that I like to call it the safe zone, where the VIX isn't too elevated. We're just in this area here. So this is just a color-coded chart that I like to use, just to kind of give a basic, a really basic signal to the type of environment that we're currently in. Now, I did touch on the 10-year note. Again, I think it's looking a bit toppy here, but ultimately we'll see how the 10-year note develops over the course of the next few weeks. If it does reverse course again, I'm open to it. My job is really to identify the sectors and the stocks and the areas of the market, and not necessarily worry about rates in the bond market too much. But obviously the bond market's massive, so I have a lot of clients that want my thoughts on it. But obviously there's been a big move this week in a lot of the mega cap tech names. The triple Qs rebounding from their 200-day simple moving average. Again, just to draw your attention to the market breadth data. Again, very, very constructive. Started on the decline the day that looks like the US dollar peaked as well. So, don't underestimate the significance of the US dollar. You'll have a lot of the analysts across, FinTwit and YouTube, etc., that will try to convince you that the market's moving on 15-minute candlestick charts on the S&P 500. It's not the case. I think those of us that really do it professionally and have built up, reputations and track records of making the right calls at the right moments, we kind of view those folks as quite amateur. But again, it's not to say that it can't have significance, in smaller term time frames. But for my work, I'm looking at bigger picture stuff. So we'll see how the triple Qs develop. I think there's a little bit of a trend line here that we need to probably overcome over the course of the next week. Given the move that it's had, it would be very, very normal to see mega caps, in the NASDAQ take a little bit of a pullback here, but I think it would probably be a pretty healthy pullback and not necessarily indicative of imminent doom like some of the folks on Bloomberg and CNBC, etc., would have you believe. Again, another chart is the equally weighted S&P 500. We've put in a failed move this week on the back of, obviously, the communications from Jerome Powell and the Fed, etc. Again, very, very textbook, head and shoulders pattern. If you follow my work again closely, you'll know that I was covering this in real time. Again, I don't want to come across as one of those hindsight Harrys. So it's put in a failed move here, and again, we'll see how things develop once price starts to touch above these 143, 144 levels. The small caps, probably the most pleasing thing for me, I think, over the course of the last week, is the resilience this week of the small caps rebounding from very, very logical price levels. So the fact that we're seeing a massive bid in a lot of the crappy, beaten up areas of the market, it's no real surprise. It's because the small caps are rebounding from this 163 level. We all know the deal with range bound charts. You buy low, you sell high. But the Armageddon scenario was always in play if we broke below these key levels, but it's quite pleasing to see that they're holding up at the moment. And again, it's just probably one of those charts that lends itself to, starting to maybe dip toes in the water with buy positions in the market. But gold obviously gets a lot of attention, especially recently. For me, gold is really, really exciting at the moment. I think, with my client work, for example, there's been quite a few gold miners that have been put to them over the course of the last week in preparation for a potential breakout in the gold space. For me, the level is 2100 for gold, priced obviously in US dollars, and I think there's about 50% upside if gold can catch that breakout. But to be clear, the gold market isn't that appealing to me. It's more of the gold miners that are appealing, because the gold miners will move like those crypto stocks. You'll see them move 10-15% in a day, and I think there can be a lot of alpha generated there. And I have been putting some gold names to our clients already in preparation for some of the moves that I'm hoping to see take place there. But I am about to walk through all of the individual stocks. We are going to kick it off with the Magnificent Seven, as they're known. I think, bar none, I think most of you email, message me on social media asking me my thoughts on those stocks. So I'm just going to cover them all. And then I've got around 15 individual names for your watch lists for the rest of the month. But if you are still here, it tells me that you're getting a lot of value from my work. So please do hit the like button. Really, really means a lot to me, and really, really appreciated. And if you do have some followers on social media, feel free to share the analysis. Again, it would be much, much appreciated. But let's kick it off with Apple. We've had the Apple earnings out the way. Now, I know what most of you that are bearish Apple are going to say. There's no innovation, their sales are on the revenues on the decline. I get it, but at the end of the day, it's still Apple. Folks are still going to buy the stock regardless. Funds are still going to buy the stock regardless. And again, for me, very, very straightforward. It's in a bit of a holding pattern at the moment. I'll actually be sharing this chart with our clients this weekend, just in preparation for a potential breakout there. We've also got Amazon. Again, they've had earnings. The earnings are now out the way. We're obviously dealing with a $1.4 trillion market cap. We've got positive earnings growth as well. But for me, the next level that I'm watching here is this 145 level after it rebounded from its 200-day simple moving average. Now that obviously brings in Meta as well. Now, for disclosure, this is a chart that's already been shared with our clients and members over the course of the last week. Again, positive earnings growth. We are range bound. I'm hoping to see the 325 target come into play. And I think for new entries, I think from a risk to reward perspective, perhaps above 325 might make some sense there. So one of our buy low, sell high charts. Nvidia, again, rebounding from logical levels. I would encourage you, even if you are somebody that maybe doesn't have the time to get into Fibonacci and the levels, and just basic support and resistance on charts helps, folks. You don't need to look for moving average crossovers on 5-minute time frames and all that nonsense. You can actually just use basic support and resistance levels. So again, I'm hoping to see Nvidia retest that $500 level again. This is a textbook buy low, sell high chart. Microsoft, again, hoping to see these levels tested at all-time highs. Obviously, we've got that earnings growth, reasonable PE ratio, again, for a tech company. So our upside target here for Microsoft is around 368. Google, again, you have to look at these stocks, folks. I think is any big dip, any big discount on these stocks, I think you have to view as opportunity. You can't treat these Magnificent Seven stocks the same as you would your small cap tech name that's down 70%. I think when you get those 20-30% declines in these massive companies, you just have to look at it as an opportunity. And certainly it has the opportunity there. I think with Google, it's still above a rising 40-week moving average. And I like it. I think most folks have to just like companies like Google despite earnings and your interpretation of the earnings, etc. And we also have Tesla. And for disclosure, this is an entry that we've put to our clients this week, and we like it very, very much, and we'll see ultimately how things develop there with Tesla. We also have Palo Alto Networks. Now, Palo Alto is a tech services company. Now, they are very, very growthy, as I'm sure most of you know. They've got a really high PE ratio, but they do have really good earnings growth. Again, it's one of those Fibonacci charts for us, and I like it above this level at 263. I think if there's a breakout above that level, I think that brings in logical targets around 337. We've got Netflix. Again, we're working with upside targets here around 452. We've got a PE ratio there of 42, and ultimately, again, it's one of those names that you just have to look as an opportunity when the dips arrive. Disney is looking very, very interesting at the moment. I've actually been covering this chart for a couple of months now, maybe 6 weeks or so, just as a buy low, sell high opportunity. Last week I actually put this as one of those that could potentially break down, but ultimately this week the stock has rebounded pretty well. And I think if you are looking for stocks that are potentially basing and bottoming, then I think above 87 might make some sense there for Disney. Coca-Cola, again, one of those charts that is ripped off its lows. Again, this is one of our capitulation calls recently. I did post this chart to Twitter, and we're working with targets there of around 58, 59. But for new entries, I think if there's a breakout above this level, then that might make some sense. Again, I understand Coca-Cola might not be one of those names that you're necessarily attracted to, but I think, especially over the course of the last 6 weeks, looking at consumer staples names that have capitulated and deeply oversold, those are the types of names that I've kind of been putting to my clients and members over the course of the last few weeks from a bullish perspective. They've made a lot more sense than those risky tech names. We've got XPO, transportation company, if you don't know. Looks like it's potentially ready to break out. I think if it does break out here, then that brings in logical targets around $100. We're looking at a market cap there of 9 billion. These are not small companies by any stretch of the imagination. One of the charts from our midweek halftime analysis this week for our clients has done exactly as expected. It's posted really positive earnings. Reaction has been positive. They've raised guidance, and it looks to be breaking out this week as well. We've also got a bullish setup developing within the energy markets, Petróleo Brasileiro, if I've said that correctly. and potentially bullish pattern developing there. I like it above 1550. We've got CBOE, which just continues to defy gravity, making new highs despite the correction. Now, if you're not familiar with what CBOE can do, this is a longer term monthly chart. Obviously, this is one that we've been covering a while for our clients, but you just need to have a look at this monumental uptrend from 2016 to 2018. When this thing gets going, it can generate massive returns. It's already on its bike at the moment, so long may it continue. It brings in Targa Resources. Again, this will be a name that I'm sure that many of you just will not pay attention to these types of names, but I think looks like it's potentially trying to break out of a 15-month base. I think if there's a breakout there above that $90 level, then I think that brings in quite lofty upside objectives dating back to 2014. We've got Cameco Corp. Now obviously, I'm sure there's many of you that are not really familiar with what's going on in the uranium space at the moment. There's a lot of moves taking place. Cameco Corp, just for disclosure, this has been one of our high conviction ideas a couple of months ago. It already met our upside targets, but I am now starting to watch this $45 level for some clues and the possibility of jumping in again if it gets that sustained breakout. Again, one of our buy low sell high charts, Louisiana Pacific. I understand that this will be a name that not many of you will have heard of, but again, this is where you can't just look at charts of the S&P 500 and look at some stocks that I think for professionals, especially those of us that do the hard work, we're scrolling through thousands of charts every week so that we can identify these types of charts, and this is already halfway towards our upside targets here. So Louisiana Pacific, they've reported earnings. The earnings look fine, and we'll see how long this develops. So I do hope that you've found some value from my work. If you are wondering who I am and what it is I do, feel free to jump onto our website at honeystocks.com. My work's really well known in the professional world for my ability to highlight the big risk on, risk off turning points in the market. And like I said at the start, my work is all fully time-stamped. Some of our big time-stamped calls recently, the recent correction top, the market crash last year, made a massive market bottom call last October, the rotation back into technology earlier this year, and you could go all the way back to the crash of 2020 as well, where I got our clients and members defensive ahead of that. I only use my own charts and data, and I do have a track record of being mostly correct, which obviously helps in this field. But we provide memberships to all of our premium work. Now, our premium work includes our premium weekend analysis, which contains all of our best charts. We provide access to all of our high conviction investment ideas. I'll show you what that looks like in just a second. We also provide access to our midweek halftime report. We also provide access to a wonderful community of investors and traders from across the world, access to all of our chart books, which cover the most liquid ETFs and commodities and stocks from around the world. And we also provide access to our technical analysis program, which I also provide free with all of our memberships, and I'm told that it is very, very good. But just to quickly show you what our high conviction ideas look like, this is a recent idea that went out for Tesla. Now, again, we've got Tesla, which has been massive on two separate occasions this year. Meta, which was a massive winner at the start of the year when I started to make bottom calls on technology names. CCJ, which I touched on just a few minutes ago, met our upside targets already. DraftKings, again, which is a good winner earlier this year. We've got Amazon, massive winner, and Apple did its thing as well. But I am very, very unique in what I do. I log for transparency all of our high conviction ideas. I timestamp all of my work, and that includes the high conviction ideas. So feel free to go and scrutinize that and see if the types of stocks that we like to recommend, the types of stocks that you like to buy as well. But I have logged every single idea for the last 5 years. So again, like I said, please do go and do your due diligence. But I think generally speaking, my work's a good fit if you are somebody that has a mid-term approach and you're looking, weeks to months out. If you are someone that keeps losing at day trading and you just can't make that nonsense work. If you are looking to learn technical analysis and build a systematic process. If you are too busy with work, family life, business. If you'd like to have access to somebody who's able to highlight and pinpoint the big market turning points. I think most of our clients find a lot of value from that. And maybe you're just sick of hunting around social media for ideas every day. Again, my work might be a good fit for you. But please do check out our website. Don't forget to hit the like button. And if you have stuck here to the bitter end, thank you very much for watching. Have a wonderful weekend. Thanks.